Everyone thinks financial disasters happen because of bad luck, bad leaders, or sudden shocks. That's wrong. Most financial catastrophes happen because people repeat the same money mistakes, just with bigger numbers and better excuses. And the most dangerous part? We're making those exact mistakes again right now. Imagine waking up one morning and realizing your money is worth half of what it was yesterday. Your savings feel fake. Your salary feels useless. Your future plans quietly disappear. This isn't a nightmare. This has happened to millions of people throughout history. Empires collapsed. Currencies died. Entire generations were financially erased. And every time, people said the same thing. This time is different. It never was. History loves clean explanations. They tell you the Great Depression happened because of a stock market crash. They say hyperinflation happens because of war. They say financial crises happen because banks make mistakes. That's the official story. But crashes don't create disasters. Human behavior does. Because here's the part most people miss. Once you understand the pattern behind history's biggest money mistakes, today's economy starts looking uncomfortably familiar. The first mistake is believing that printing money creates wealth. In the 1920s, Germany was drowning in debt after World War I. So they did what governments always do when they're desperate. They printed money. At first, it felt like a miracle. Debts became easier to pay. People felt richer. The economy looked like it was healing. Then reality arrived. Prices started doubling in days. Workers were paid twice a day just to afford lunch. Children played with stacks of cash like toys. At its peak, a loaf of bread cost trillions. Money became cheaper than firewood. The mistake wasn't printing money. The mistake was believing that money itself was wealth. Printing money doesn't create value. It just decides who loses first. And Germany wasn't the last country to learn that lesson the hard way. The second mistake is thinking debt is harmless as long as it grows slowly. Even the Roman Empire made this mistake. Rome funded wars, infrastructure, and luxury through debt and currency debasement. They reduced the silver content in their coins. Same design, same face, less silver. Then, even less. Eventually, Roman coins were basically metal lies. At first, nobody noticed. Then prices rose. Trust disappeared. Trade broke down. The empire didn't collapse overnight. It decayed financially first. Debt didn't kill Rome instantly. It made the collapse unavoidable. And now comes the mistake that destroys fortunes without warning. The third mistake is believing bubbles are proof of intelligence. In the 1600s, people in the Netherlands sold houses to buy tulips. Flowers became luxury assets. Prices exploded. Everyone believed demand would never stop, till one day, nobody showed up to buy. Prices collapsed, fortunes vanished, lives were ruined. Bubbles don't happen because people are stupid. They happen because people are human. Optimism turns into confidence. Confidence turns into leverage. Leverage turns into disaster. And one sentence fuels it every time. Everyone else is making money. Why shouldn't I? This pattern never disappeared. Dot-com stocks, housing markets, cryptomanias, speculative booms, different assets, same psychology. Cheap money, easy credit, blind belief. And then reality shows up. If money could scream, this is the moment it would lose its voice. But here's the lesson nobody likes hearing. The fourth mistake is believing the system will protect you. In 2008, the global financial system collapsed. The official story said nobody could have seen it coming. That wasn't true. Warnings were everywhere. Banks took reckless risks. Regulators ignored red flags. Governments delayed action. When everything fell apart, the system was saved. Banks were rescued. Executives were rewarded. Regular people were not. They lost jobs. They lost homes. They inherited debt. The system didn't fail. It redistributed losses downward. This is the pattern behind history's biggest money mistakes. Not math, not complexity, human behavior. Greed dressed as optimism. Fear disguised as confidence. Short-term thinking pretending to be strategy. Finance isn't logical. It's emotional chaos with a price tag. And if you think humanity has learned from history, just wait, because the next money mistake is already being built. Right now.